Hey guys, Stock Saturday, and it's ever so slightly red week for me this week. So I'm underperforming the market. S&P and Nasdaq both up 1% or two. Tech stocks sort of starting to come out with their earnings, and they're looking pretty good. So me not having a great deal of them has not seen me sort of keep up. Part of this, so I'm down about £1,000, not even a percent. And also Stellantis has gone ex-dividend, so be getting about 800 odd pound from that. So that's sort of attributed most of the loss, although it's not a loss, it's just, you know, dividends. I didn't sell it in the end. Sort of realised that they drop on the day by the sort of after withholding tax amount generally, so it didn't really seem worth it with the sort of FX fees you'd have to pay. So yeah, other than that, it's been a relatively quiet week. But so talking of earnings, we've had Meta or Facebook's earnings. Some people still refuse to call them Meta. And they looked pretty good. Part of this sort of has included laying off a hell of a lot of staff, so cost cutting. But yeah, looking at their sort of presentation, I don't think people sort of quite realise that they do really well in Asia. So yeah, those numbers sort of still seem really good. Europe as well. Pretty good. US is obviously a large portion, but yeah, that's decent numbers considering sort of population and GDP of a lot of these countries. I thought that was decent. Sort of family of apps user numbers are slightly up. It is ever so slightly up. You know, you're talking sort of 1% a quarter, but on that many people, it's still good. Reality Labs is the sort of unfortunate loss. They have said the loss on those is going to carry on increasing. 4 billion, it was 4.2 billion last quarter, but sort of year on year, it's quite a lot. I think people would be sort of more willing to accept this if at least the revenue was going up, but you sort of had a lowest revenue now since Q2 21, 339 million. Haven't quite got to the bottom of whether this includes headset sales, because they have said they've now sold 20 million Quest headsets. So 339 million seems quite a low amount for revenue, including no games or anything. But yeah, 4 billion loss on that. I do think some of this is sort of going to VR capex as well. So and sort of AI capex. So I don't think it's necessarily all 4 billion loss for Reality Labs, but there you go. I think people would sort of prefer if they just got rid of that, but I don't. So then net income obviously is way down from the peaks, but seems to have sort of bottomed a couple of quarters ago and is on the rise. Earnings per share doing pretty well. They are doing buybacks, so sort of taking people's thoughts on board that they should have been doing buybacks. Capex up hugely, which is no surprise. As I say, the family of apps doing pretty well. Monthly active people, I'm not 100% sure whether this is sort of doubling up on people, doubling up on accounts and that sort of thing, because 3.8 billion people is sort of 50% of the world, and I'm not sure 50% of the world are using a Meta app, to be honest. Daily active, yeah, so as I say, daily active users in Asia Pacific of Facebook apps is 873 million, which is pretty good. It's the highest region, and is sort of still continuing to grow, where US and Canada is fairly low. But obviously 200 million of US is sort of 60% of the US population. So that's good. Also, more people is a very slight increase, but more people are using the apps. It's the daily active users divided by monthly. So the amount people are using it is increasing essentially. But yeah, pretty decent figures overall. They don't seem to be making any acquisitions at the moment. They're just sort of spending all the money on buybacks and sort of cutting costs where possible, which I guess is what people have been sort of pushing them to do, but also increasing sort of growth capex, if you like, so cutting staff that they feel they don't need, similar to sort of what Google have been doing, and sort of spending that money on growing. But so cash has come down again, 14 billion down to 11.5. Securities down a little bit as well. But yeah, nothing too much to worry about there. Debts stayed about the same. Still not 100% sure they needed this debt, but there you go. So overall, I thought that was pretty good numbers, and the stock seems to have risen as a result, up about 12%, I think, on the earnings. So everyone's loving it. So on to one that people aren't particularly happy with, Taiwan Semiconductor. Their results, as expected, because we've seen the monthly revenue numbers. The quarterly report isn't sort of a huge surprise, really. It's not doing too well, but I wasn't expecting it to be. So revenue down from Q4, but still up on Q1 last year. So not the worst thing. They did sort of expect. They said this year is going to be a little bit rough, but still probably up on last year. So yeah, I'm kind of happy to just leave them there. I don't think the competition are doing any better, and expect the market to be doing better, a lot better, in the years to come, with sort of electric vehicles and sort of basically chips going into everything. So yeah, just looking at their balance sheet as well, cash is up on last month as well. Nothing too much on debt as well, and just coming to their presentation, just to sort of see the split of segments. So sort of pretty much everything is down. Smartphones down more than anything. High performance computing down a fair bit. Internet of Things. Automotive still up, but there's a reasonably small segment, 7% of revenue. But yeah, not a huge surprise from last quarter. And their guidance is revenue slightly lower than Q1 for next quarter. We'll see their sort of April revenue in a couple of weeks. So yeah, not too bad. Margin still okay, and operating profit pretty good. So yeah, I think use the opportunity for these low prices, and look forward to sort of next year, really. Just accept that this will be a quiet year. So another one struggling, Sylvania Platinum, my sort of little darling AIM stock, struggling as expected with the rhodium price drop. That sort of still provides the bulk of their revenue, despite only being sort of 12% of their output. But yeah, the ounces down as well, 19,000 ounces down to 17,900, so that's not the best. Basket price down as well from $2,400 to $1,900. That was expected with the rhodium price drop, although we are getting platinum supposedly in a deficit this year, and yeah, even rhodium sort of does seem to be off its lows. It sort of made a double low below $8,000 an ounce, and is now back up to about 8,700. So if platinum's in a deficit, that could mean rhodium is following suit with increased automotive demand, and the car sector sort of doing better than we thought. Chip shortage potentially coming to an end. But yeah, looking at obviously revenues down with the basket price and ounces output down, so that's not the best. CapEx down from last month, so they've been not needing to spend quite as much, but yeah, net profit down over 55% from last quarter, so that's not the best. But cash up a reasonable amount. This is to March 31st, so there will have been a little bit off that for the dividend. Sort of paid quite a small dividend this year, or April at least. So yeah, I think that'll be sort of $130 million. But yeah, I'm still very happy with that. Would expect to start seeing better numbers going forward. And their all-in sustaining cost has increased 7%, but the total, everything included, all-in cost is $1,000. So that stayed pretty flat. And so with $1,900, even at $1,900 basket price, then still a very healthy profit. And if we can start to get a rise back up to the highs, then yeah, that cost looks very good. One that I have been sort of considering maybe making a switch is Digital Realty Trust. So I'm sort of a little down on this. I think it shows about 23% on my spreadsheet, but that doesn't include dividends and doesn't include the FX. So I bought this quite a while ago, and I think with the dollar, I'm actually sort of pretty much close to green, if not sort of maybe 5% down. It has sort of recovered over the last month. It was sort of in the 90s, got into the high 80s briefly, and yeah, just sort of seeming they've got a hell of a lot of debt. And been listening to some sort of there was a business breakdowns episode on data centers by Jim Chanos, who's sort of raising some interesting points, pointing out that you've got people like Amazon and Facebook and people building their own data centers and not wanting to sort of lease off Digital Realty. So, your biggest tenant is also now competing against you and building their own places. And yeah, just sort of reminding everyone that it's a very capital intensive business, more so than sort of some of my other REITs. So I've been looking at maybe switching that into sort of one of the other REITs, sort of American Tower, or maybe one of the Tritaxes in the UK, or Vici, or yeah, maybe just putting it into something else, maybe top up my silver miners or something. I've sort of got this long-term sort of 2-year prediction that my Fortuna silver mines could potentially 2 or 3x. I really can't see Digital Realty Trust even 2xing in even 3 or 4 years. So yeah, I'm maybe considering sort of taking a small loss on this and sort of revisiting later on. And then just coming to the news, there wasn't a lot of news this week. Thursday sort of had pretty normal jobless numbers, so nothing sort of too much going on there. But you did have Friday. We've had some provisional GDP numbers as well. Never know what to make of the provisional numbers. They always get sort of adjusted quite a bit. But Friday, you had Jerome Powell's favourite inflation measure, the core PCE monthly price, and that was sort of as expected somehow as expected on a monthly basis, but higher on an annual basis. So maybe a rounding error there, but it's come down from 4.7% to 4.6%, which is barely a drop. So you've got the FOMC interest rate decision on Wednesday, I believe. And people sort of expecting he's going to see the red mist with this not coming down much at all, and certainly do a 0.25% rise, but maybe even say, sort of reiterate, we're not dropping, we're not going anywhere, they're going to stay like this for the rest of the year. I think they've sort of said before that they're not dropping rates all of this year, despite the sort of banks still struggling, or the smaller banks at least. The big sort of JP Morgans and them are doing well, but just had, I think, First Republic basically go bust. So yeah, that's 4 banks now, and sort of withdrawals. You can see even from the big banks, people are withdrawing money, or at least putting it into, ETF, money market funds, and that sort of thing. You got sort of JP Morgan paying 0.01% on a savings account, and money market funds that US people can easily use at sort of 4.5%, 5%, and now going up 1/4%. So that'd be interesting on Wednesday. So that is really it for the portfolio this week. I am back in Shell. I made my switch from BP back into Shell. I sort of had a quick look over the both of them and sort of didn't really see any reason to hold BP. Sort of seems to be a lot of accusations of greenwashing for both of them, sort of badging up oil and gas spend as green, and not spending enough on renewables as they thought. But BP have basically announced that they're tailing back renewable spend as well. And I've just always sort of preferred Shell. So my capital gains adventure is over with them, and back in them at a 2.4% in the green. I haven't done the Vanguard Emerging Markets back into iShares just yet. I'm not 100% sure sort of whether I'm going to hold on to this, or I don't know, thinking about maybe selling that and moving the money into the ISA, and just sort of coming back to emerging markets later on. Sort of thinking we're potentially at the low on certain bits and pieces, maybe my silver or crypto miners. And I can't see the emerging markets. I can see it doing well long term. I'd certainly get back into it later on, but I can't see it rocketing up from here, certainly sort of in the next 2 years. So, yeah, it's potentially one that I could be sort of filling my ISA with not too long away. Obviously got to fill it in some way. I don't really have the, since I've sort of gone part-time at work, I don't really have the income to be able to fill it. I didn't really before. I would have struggled to sort of fill 20k from my salary in there each year. So yeah, I need to do something with that to get this filled up. Still got the treasuries as well. I sort of nearly sold a couple of thousand of this to put into CleanSpark and Fortuna Silver Mines, but sort of held back in the end. But yeah, still sort of considering doing that. And the IG ETF, ISA, sorry, still sort of no changes on there, and still not allowed to move this to Interactive Brokers, unfortunately. Very, very frustrating, them not sort of getting their act together. I did have to pay a custody fee of £24 with IG because I haven't done a lot with my ISA recently, so that's irritating, but hopefully be able to move soon. CleanSpark in there doing pretty well, and well, all 3 of them really in the last sort of month or so. Atalaya Mining doing okay. Pan American I would expect to be picking up soon. And then Chinese tech sort of having a bit of a rough time of it, down below 5,000 now. So yeah, not something that I'm sort of looking to buy really, but certainly hold on to what I've got in there. But yeah, interesting. So underperforming, so certain, but I see reasonable performance sort of over the next 2 years in what I'm in. Maybe more so in the ISA side. I'm not 100% sure what will happen to this lot, but yeah, be interesting to watch. So yeah, like and subscribe, and join the free Discord in the description. See you soon.